Today's discussion, like you have rightly seen, is on the topic regulating microfinance in the age of fraud, restoring confidence and growth. We are of the opinion that the reforms that have been announced by the BOG and the sector, it is important for us to bring industry players together to dissect these reforms and possibly to contribute towards the policy changes that we are expecting or that are being undertaken. So that is the reason for the topic that we have selected this afternoon. So thank you very much for coming. We do not take your presence here lightly at all. So I would like to start with some opening remarks from the UPSA Law School. And to do that, we would like to call upon our Vice Dean. She's in the person of Dr. Francisca Kusiapia to share some opening remarks for us. Thank you.
Thank you very much, Gertrude, and good afternoon, ladies and gentlemen. A warm welcome. I bring you wonderful greetings from the Dean, Professor Ernest Kofi Abochi, who unfortunately could not be here. But we're excited to have all of you here because, as Gertrude rightly said, this particular program is to bring together the experts from the industry, okay? And then, of course, give some connection to our usual theories that we teach in classroom to put some life into it. And I'm excited that the theme actually resonates with each and every market woman on the streets, because microfinance is an essential economic powerful tool for the woman on the street, for the farmer, the small farmer hidden somewhere in the village, because that is their first point of call that they need to support their activities. And therefore, we are excited to have you on our wonderful campus. And the fact that we are also streaming, I'm reliably informed. And so those online, thank you very much for joining us as well. And we are looking forward to an engaging discussion that would equip us with the tools, the right tools that we need to make our microfinance subsector very, very rigid and protected for the small farmer somewhere in the village or for the market woman. Because whether we like it or not, thanks to the digital era, those who are perpetuating fraud are also actively working hard to earn a living. So warm welcome to each and every one of you, especially to our panelists. Thank you so much, and we look forward to an engaging discussion. Thank you.
Thank you so much, Dr. Kusiapia. I believe we can do it better for her. Let's show her some appreciation for those remarks. Thank you so much for your support. So I did mention at the start in my opening remarks that this platform is made possible by Absa Bank. We have always said that this particular bank continues to show leadership in the sector through many initiatives, but for us, particularly through its support for events such as this, by supporting an academic institution to bring to the fore matters that pertain to the banking sector. So, would like to take some remarks from Absa Bank as well, just a few opening remarks. And to do that, I would like to invite the Chief Strategy and Operations Officer of Absa Bank. He's in the person of Mr. Adolf Kwegan. He's not new to this platform at all. He's been here so many times. Please put your hands together to Mr. Kwegan, for Mr. Kwegan.
Thank you, and good afternoon, ladies and gentlemen. On behalf of Absa, I'm delighted to be welcoming you to this edition of the UPSA Roundtable discussion. We are honored to be the headline sponsors of this important quarterly forum, which has become a respected platform for thoughtful dialogue on issues that matter to our industry, because on many occasions they've discussed issues in finance, on issues that is relevant to government and governance, on topics that are relevant to the academia and society at large. The relevance of today's theme, regulating microfinance in the age of fraud, restoring confidence and growth, cannot be overemphasized, particularly if you cast your mind back to the journey this industry have gone through over, if I'm not mistaken, the last 5 to 10 years. Microfinance play a vital role in financial systems by improving financial inclusions and access to credit for some otherwise marginalized individuals and small businesses across our economy. A strong and trusted microfinance institution is vital to sound financial system, which is fundamental to inclusive growth and economic stability and development. However, past instances of weak governance and incidents of fraud within the industry eroded public confidence and underscores the urgent need for stronger regulation and institutional reforms. Restoring confidence in the financial system requires collective action from regulators, financial institutions, academia, and policymakers alike. At Absa, we firmly believe that sustainable progress is driven by collaboration, open conversations, and courage to challenge conventional thinking. A platform such as this aligns strongly with our purpose of empowering Africa's tomorrow together, and as we say it, one story at a time. By bringing diverse voices to the table, we are better able to shape solutions that are practical, inclusive, and forward-looking. We commend UPSA for its leadership in convening these discussions and for consistently bridging the gap between theory, policy, and real-world application. As a bank deeply committed to Ghana's economic and social development, Absa is proud to support initiatives that foster knowledge sharing, innovation, and evidence-based decision-making. We look forward to insights that will emerge from today's discussions, and most importantly, to help insights that translate into actions beyond this room. Thank you, and I wish us all a very engaging and impactful session. Thank you very much.
Thank you very much, Mr. Kwegan. We are so grateful for those words. Now, to set the tone or to set the background for our panel discussion, there's a video explainer that was shared with us by Dr. Nane of the Bank of Ghana. So we want to use the next 7 to 10 minutes to watch that video that has been put together by the Bank of Ghana. Then against that, we can now delve into our panel discussion. So yes, please let's enjoy the video.
Hello and welcome. Today, we are diving into Ghana's bold journey to reform the microfinance sector. Our purpose? Simple, to give you a shortcut to understanding this critical financial landscape and unpack the comprehensive set of reform measures designed to transform the sector. These reforms align with the National Microfinance Policy Initiative referenced by the Minister of Finance in the 2026 National Budget. The whole idea is to address current market failures in the microfinance sector and build a financial ecosystem that's more resilient, more inclusive, one that can really restore public trust and drive growth.
Let's start by digging into the challenges this reform is trying to solve.
The sector is highly fragmented, with many small, undercapitalized institutions lacking the strength to absorb shocks or adapt to the fast-changing banking environment. Governance and management often weak. Most institutions are in the form of mom and pop setups with poor internal controls which are not suitable for commercial deposit taking and lending business. What about mission drift? Many institutions today have moved away from their original inclusion business models towards incommensurate lending and high interest rates, imposing unsustainable burdens on vulnerable clients. Several institutions consistently face reporting and accounting difficulties due to lack of basic internal banking system requirements, while the same or others are stuck in operational inertia, barely growing and simply hanging on in the system with no clear vision or exit ways. These deep structural and operational weaknesses have created a fragile ecosystem marked by persistent losses and eroded public trust.
Just look at these numbers. Back in 2017, the microfinance sector held more than 15% of all banking assets in Ghana.
Fast forward to 2024, that share has plummeted to just over 8%. Losing nearly half your market share in just 7 years is a huge red flag that deep structural and operational challenges are at play. So what we are working with is a 2011 4-tier framework, everything from rural and community banks, savings and loans companies, finance houses, deposit and non-deposit taking microfinance institutions, financial NGOs, and all the way down to individual microcredit lenders and traditional social connectors. And here's the crucial point about that framework. Its original intent was to solve a very specific problem at the time. There was a rise in unlicensed operators taking advantage of the public. The 2011 framework was designed specifically to identify and categorize players in the sector, formalize and bring oversight to the operations, and most importantly, protect consumers. This reform isn't starting from zero. It's about learning from what works in peer countries and building a better system for Ghana. Here is an important starting fact. Microfinance is a powerful idea. It has helped millions escape poverty, finance education, help businesses and assets.
It's a key enabler and instrumental tool for achieving several of the 17 United Nations Sustainable Development Goals.
So, extensive studies were conducted across West and East Africa, the US, Canada, India, the EU, and several others. The aim to critically examine and compare microfinance systems globally and draw the best lessons for designing the next chapter of Ghana's microfinance sector. What were the big lessons from these global examples? What works in microfinance and what doesn't? The analysis pointed to 3 broad types of institutions operating at the lower end of the banking sector globally. First, market-oriented microfinance institutions, commercially driven, deposit-taking, borrowing to finance operations. Second, socially oriented models, think credit unions or SACCOs, member-owned, community-driven, offering dividends, low interest, and flexible lending. Third, hybrid models, rural or community banks, blending commercial goals with social impact, deeply rooted in local communities. What about adoption patterns across countries? For market-oriented models, the data shows 2 distinct paths. Some countries like Ghana and Nigeria pursued mass licensing approaches, creating fragmented landscapes with numerous small institutions struggling to meet regulatory and prudential standards, amplifying systemic risk. In contrast, countries like Kenya adopted consolidated models with only few heavily capitalized and deeply integrated microfinance banks. The strategy, keep numbers small but institutions strong, enabling easier enforcement of regulatory and supervisory rules. For socially oriented cooperative models, the contrast is stark. Credit union penetration exceeds 65% in the US and covers more than 1/3 of Kenya's population. Ghana, which pioneered this movement in Africa, lags at just under 5%. That represents a huge amount of untapped potential for cooperative-based financial inclusion. The study also drew fascinating lessons from hybrid models. Take the United States, for example. A staggering 92% of all banks there are community banks. These locally owned institutions are vital, serving over half of all small businesses and demonstrating how commercial focus can successfully blend with deep community roots. And this and the development of the microfinance sector correlates with broader financial indicators. For example, Kenya's credit to GDP ratio is about 32.5% compared to Ghana's 9.3%, and its deposit to GDP ratio is more than double that of Ghana. Kenya also enjoys lower interest rates and has consistently maintained single-digit inflation. This suggests a direct link between high penetration of the right microfinance model, its ability to mobilize savings, extend credit, and create opportunities for citizens across the economy. It shows what's possible when the right framework is in place. Boiling these global lessons down, you arrive at 4 key ideas for a successful microfinance ecosystem. 1. Design a framework that deliberately balances institutional categories to serve different market segments considering their business models and market characteristics. 2. Drive consolidation and modernization of existing institutions to make them stronger, better governed, and operationally efficient. 3. Promote population penetration through indigenous participation not only as customers but also as co-owners, providing multiple income streams, dedicated funding, and ease of doing business with commensurate institutions. 4. Build a system supported by strategic industry-level institutional support and centralized services to improve operational efficiency, improve wholesale support, and facilitate policy flow. This brings us to the heart of the proposal, a complete redesign of Ghana's microfinance architecture. And here it is, the new system. Each category has a distinct and complementary role. You've got microfinance banks, community banks, credit unions, and last mile providers. Each targets a specific market segment and plays a clear role in this new financial ecosystem. First up, microfinance banks. Think of these as the consolidated commercial engine of the sector. The big idea is to enhance or merge many of today's small, weak, market-oriented microfinance players into fewer, stronger microfinance banks. This means more capital, better governance, more expertise, enhanced operations, and the ability to properly finance small and medium-sized businesses. And this idea of consolidation is based on current market dynamics. What's already happening in the sector? Currently, the top 10 institutions across the existing categories control about 75% or more of the total assets, deposits, and credits. The reform builds on this, creating fewer but better capitalized and governed institutions that are stable and competitive. Current owners must join forces and work for the collective good. Next, community banks. This is about upgrading the old rural bank model for the 21st century. The vision is for them to become truly local, Ghanaian-owned banking anchors, serving both urban and rural areas with modern banking and a focus on community development. They will mobilize street and area-level economic activities, integrate communities into the national financial architecture, and address financial exclusion in both urban and rural areas. Cities, towns, and villages that can own and support community bank will be given the opportunity to do so once they meet the necessary requirements. Third, the plan is to finally unlock the incredible potential of credit unions. How? The Bank of Ghana will for the first time begin licensing and supervising the credit unions based on set thresholds. The aim is to better integrate them into the financial ecosystem and to enable them extend their social and economic reach in a responsible manner. Encourage identifiable work, professional, trade, farm, faith, and other homogeneous groups to form viable financial cooperatives that serve their interests. Finally, last mile providers, susu collectors, small finance NGOs, VSLAs, etc. The approach here is light touch, organize them into associations and cooperatives to provide consumer protection and accountability. Holding this entire structure together is a crucial proposal to retool the Apex Bank. ARB Apex Bank Limited was established to enhance the operational efficiency of rural and community banks and deepen financial inclusion. Its current mandate confines assistance to RCBs, leaving other microfinance peers without access to essential services and infrastructure. Under the new architecture, the Apex Bank's mandate will extend to all categories within the sector. It will be recapitalized and restructured as a strategic sector-wide financial intermediary, delivering centralized banking services and managing payments and clearing, reserves, fund management, and liquidity support. It will consolidate stakeholder and institutional support and facilitate the transmission of monetary, fiscal, and financial inclusion policies. The goal is to position it as a strategic policy tool for sector efficiency, stability, and development. When you put all these pieces together, the new structure and the restructured Apex Bank, what's the ultimate vision? This is not just a regulatory tweak. It's a vision for a new finance and economic reality in Ghana. It is about a financial system that people can trust, a system that guarantees operational resilience and deep participation, where economic policy works better and where capital flows through millions of small businesses and informal workers, the true engine of the economy. The blueprint is here. It is ambitious, comprehensive, and based on what works around the world. But the real test will be execution. Can this new architecture build trust and unlock Ghana's finance and economic potential? The answer will shape the country's future for years to come.
Okay, so that was a very detailed video explainer that has been put together by the Bank of Ghana. And I think that it sets the tone very, very nicely into our panel discussion. So we'll zoom in straight into our panel discussion. I'd want to introduce our panelists together with our moderator for this afternoon's discussion. So first is Ms. Dr. Seth Kwame Anane, who is joining us from the Bank of Ghana. Doc, thank you so much for making the time to join us. Joining Dr. Anane is Mr. Ken Kwamina Thompson. So Mr. Thompson is the former Chief Executive Officer of Dalex Finance. Thank you so much, Mr. Thompson, for joining us this afternoon. We also have Mr. Akwesi Abuaje, who is the Chief Executive Officer of Bayport Savings and Loans PLC. Then to do the very exciting job of moderating is our very own Chief Strategy and Operations Officer at Absa Bank, who shared a few remarks with us earlier, Mr. Adolf Bega.
Thank you for that wonderful introduction. I think all of us would possibly begin to think that something interesting is going to happen in the sector, having watched that video explainer from the Bank of Ghana earlier. But generally, we may want to appreciate why these reforms are being undertaken in the first place. And so, luckily for us, we have a very knowledgeable person on the subject from the Bank of Ghana. So, Mr. Anani, if, first of all, if you are commenting on the question I'm going to ask, I'll be happy you also give us the context of why the Bank of Ghana found it necessary to do this comprehensive review. But generally, we know the Bank of Ghana has almost introduced the reforms already. It is not like it is about going to start. It is in the works already. And for the average customer or depositor who might begin to feel we are going to have smaller number of players in the market, what comforts do you give them? Is it going to be better for them? Is it going to inure to the benefit of the customer? So two things here, why the reforms and how does it affect the average customer?
Okay. Thank you very much and good afternoon, everyone. First of all, let me thank the governors for the opportunity to be on the platform. When I heard I was going to share the platform with Mr. Thompson and co, I was wondering how we reached there. So thank you, the bank, for giving me the opportunity. My immediate boss is here, Mr. Desmond Agboga. It wouldn't be good for me to be speaking on his behalf without acknowledging him. So acknowledging him and other senior members from the other financial institutions. So thank you very much. So when Madam Doc, when you were doing the intro, I thought you have summarized everything already in terms of how you acknowledge the role of microfinance in every economy. And with that, the video tried to just explain all the rationales, background information and all that. So I guess this question has been answered, and I would urge you to all go to our social media platform, especially the YouTube, and listen to this video over and over again. Why am I saying this? If I quote one of my deputy governors' statement on Facebook, a good policy that is not communicated well is a failed policy. So we put this video together to make sure that we are not just implementing a reform, but we are touching hood with all the people that matters, all the consumers. So if you ask the ordinary person on the street, strictly I would say that the reform, fewer but stronger, doesn't mean limitation to choice. If you have a lot of institutions that are weak and less capitalized, not managed properly, what you do is that you increase vulnerability. So that same market woman, vulnerability would have that increase if you have more but weak. But stronger resilience and well-managed institutions then provide opportunity to do microfinance in a deeper, stronger way. So financial inclusion is not just giving access, but that access is access with meaning that go deeper to improve a broader economic outcomes that we are expecting. So the bank this has not just come out of the thin air. As you have seen in the video, the bank has been doing various initiatives to improve financial services. But when you improve all these services without looking at the people at the bottom of the pyramid, then you haven't achieved anything, because those are the masses that will need food on the table every day with the struggles that they do. So how do you address that? You want to address that by linking them to the financial services properly. And you are not linking them to weak and vulnerable institutions like mom and pop institutions, as the video mentioned, who could just take their resources away. But you are linking them to institutions that are robust, resilient, well managed, so that they can create more multiplier effect, we call it, in economics, to these vulnerable clients that you are trying to protect. So if you look at it, if you listen to the video very well, we are trying to achieve many things in terms of how resilient is our sector in terms of the lower level, how robust are they, how deeper are they doing financial intermediation, and how satisfied are our clients. If you listen very well, the bank did something in 2011 which started the reform, the current structure of institutions that we are having now. Why did they do that? At that time, people's funds were being squandered. You hear of a Nigerian, you hear of this institution here, and the institution vanished. So what did the bank do? The bank tried to organize a framework that put these institutions under supervision. However, fast forward, over the years, we have seen that didn't really work efficiently as we've seen. So you will see that this reform is broader, it's very comprehensive, having institutions proportionately linked with the risk factor and capital and the governance expectations that will help them to be managed well to provide the services that we intend to achieve at the long term.
Thank you for that detailed response. And so if I'm to summarize that, it is mainly to ensure sustainability, that the public is protected and better served. Right, thank you. We also have the CEO, as he was introduced, of PayPal Savings and Loans, Mr. Absa-UPSA. Absa, having listened to both what the video told us, and obviously you've been exposed to the sector far earlier than what you are seeing in the video now. What is your view of the changes that are going to happen, and how do you see it affecting your operations?
Right, thank you, and good afternoon, everyone. From my perspective, I think some of these reforms should have happened a while back. And one of the big challenges that the non-bank finance sector has always had is we've always had structural disadvantages when we compare ourselves with the commercial banks. These reforms, from how I see it, seeks to rebalance that structural disadvantages that we have. Now, if you cast your mind, and Bank of Ghana has introduced a lot of regulations. The first one, from my view, is the NPL ratio regulation, where everybody is now required to meet a 10% NPL ratio level. That in itself create a leveling environment, because historically, the non-bank finance sector has been seen to be high risk, and the banking sector has been seen to be no risk. So if we are all meeting the same 10%, what that means is that we perform very different functions. So it levels the playing field. The Bank of Ghana is also releasing a number of directives around liquidity and how the businesses operate, and that sort of seems to also level out the playing field. So over time, how I see these reforms leading to is microfinance institutions will no longer be seen as the high-risk institutions that they were before. One of the effects of being seen as a high-risk institution is when a lot of institutions come to a microfinance or a non-bank institution to come and place funds with them, they always want a high interest rate. And that high interest rate then also leads to us having to lend to customers on higher risk segments that ordinarily you'd want to avoid. So for me, this reform comes in at the right time, especially at the time when we are seeing the economic conditions begin to ease. The second part of this reform that for me is very important is the fact that for commercial banks, there's always been a structure. In banking, there's something called liquidity support. If you run an operation, you take money from customers and you use it to lend, you use it to do business, there may be times that you will come under pressure because some customers need a big withdrawal. For the banking sector, there's always been a structure that works. They can fall on counterparty banks, they can fall on the central bank because there's a framework that allows you to go and take money to plug these liquidity shortfalls. For the non-bank finance sector, we were reliant on commercial banks. And depending on how strong your operation is, the amount that's available to you to cover these liquidity shortfalls was almost always never adequate. So you realize that an institution has a run-in, a customer goes in, and they can't get their money from the institution, and then there's a run-in on them. Nobody can survive a run-in. But with a better structure where there's enough liquidity to plan for stress scenarios, you are able to better deal with these kind of situations. So for me, the ARP-Apex Bank and the liquidity support structure that's coming in is one that's welcome, and we're looking to work through the details. A third area for us is, historically, the SNL or the non-bank finance sector hasn't had or doesn't have the architecture to support clearing. So today, if you came to a non-bank institution and wanted to open a salary account, if we need to pay your salaries, we will still need to go through a commercial bank for those checks to be cleared. Now, what happens is that over time, and it's natural because, I mean, if you work hard as a smaller player and you start sending your payments to the bigger player eventually will go and take all of those customers. Now, if we can independently clear and create our own systems, now we can serve our customers better. So that also then levels the playing field for us, because now we are now able to build scalable businesses. We can now raise funds a lot cheaper. And more importantly, we are now able to do transactions that historically we couldn't do and always needed banks to do. I think the final piece of this is, because these reforms will come with us having to have stronger governance and stronger capital levels, it then restores the trust that has been eroded over time. So to conclude, I think from my perspective, I think these reforms are necessary. It's coming at a time when it's important that we level out the playing field, and then also allows us to support the sector for which this sector was created. So thank you.
Thank you, and thank you for that detailed response. It's sounding to me that some better days are ahead and you are eagerly preparing for it already. Mr. Thompson, I come to you here. You are one of the very experienced voices in the sector. Given what we know now of the reforms that are going to happen, let's step back a bit into the past. What structural or cultural issues do you think brought us here, necessitating the need for reform in the first place?
Okay, good afternoon. I think I want to go back one step And a lot of times people talk about fraud in the sector. There wasn't fraud in the sector. We had a trust infrastructure problem. And unless we deal with the trust infrastructure, we are only dealing with the symptoms and we're addressing the disease. So let me talk about the trust infrastructure and other related issues. You worked, and before I start, I would like to acknowledge NDK and UT Financial Services because they recognized, they came up with a clear insight. SMEs needed money and the banks were too slow and bureaucratic. And we've got to separate that insight from what happened. Trust infrastructure. The collateral registry no collateral registry. Land registry, it never worked. If I tell you the number of collaterals that we came across that were false and that were approved by the land registry, you'll be amazed. It was slow, not reliable. You couldn't identify the person you were dealing with. You take a case to court. I have cases in court where they've been in court for over 10 years. These are financial people who have borrowed money and are not paying. Over 10 years, and even when you have judgment, they throw in interpreters and the courts entertain them. So unless you fix those issues, you're not going to go anywhere. I am deeply resentful of the term microfinance. Because the term microfinance carries with this small money, relaxed governance, lesser scrutiny. And it attracted operators that felt that the rules did not apply to them. That's what happened. But these institutions should have been regulated from day one because they were taking public funds. And that wasn't done. When you work in a sector which is undercapitalized, and the capital regimes were low, and you are relying on money borrowings to fund your operations, there's a lot of pressure. Because as soon as the money comes in, people are expecting returns. So the guy brings in money, or the lady brings in money at 12 o'clock. 12:01, interest starts. So that puts a lot of pressure on the sector and practitioners in the sector to actually sell the money. But I think the most serious of all was that the Bank of Ghana was too slow to react. There were institutions in this country that from day one you could say they were Ponzi schemes. They were Ponzi schemes. I mean, it was so obvious that they were going to collapse. And nobody did anything about it. I mean, I personally called some people, POG, nobody was interested. So we have to look at this infrastructure. And unless we deal with this infrastructure, we are only dealing with the symptoms, we're not touching the disease.
Thank you very much for that historical insight. And that leads me back to Dr. Anani. I think you ended with infrastructure. I want some insight from Dr. Anani on the current proposed tiered structure. How does this new architecture help you to supervise better for the intended outcomes? And what specific risks is there in this new structure? And how have you envisioned to help us address it so that there will not be a need to revisit another major reform anytime soon?
Okay, thank you. So before I specifically delve down into that, let me just indicate that this reform is actually paired with some broader system safeguards that the bank has been doing over time. So if you look at the Payment System Services Act, if you look at the reforms that Services Act brought, you look at the bank payment system oversight, including the RGTS and all the things that are happening at GIPS. Those are things that are trying to address the sector issues. If you look at the FinSoc and the cybersecurity directives that we've issued, and the way we want to make sure that we have an intelligence system monitoring the entire system. If you look at the credit reporting, and I'm glad he mentioned the MPL directives, those are all reforms that were coming broadly from some perspective. So these reforms could have happened, it's true, earlier, but if you look at the time we did the bitter pill of cleanup, the governor's announcement was that this will be followed with broader sector reforms. And quickly we got into action. Unfortunately, the COVID-19 came in around 2019 when we finished this. Then 2020, COVID-19 came in. And so it will be unwise at the point to be introducing new directives and new reforms. So we held on that. And then when we were about to issue it, then Russia-Ukraine war came in. And so we've been working until this new governor came into office and asked that what are the things that you have looked at that can push the sector forwards in the minds of resecting the sector to make sure that this sector is positioned to provide what he alluded to. And so that is how this reform, and so that's why you see it very broad and comprehensive. It's looking from top to down with safeguards and institutional infrastructure that support delivery of financial services in a better way. So what you can see is broadly what will not be there earlier would have been the retooling of XIII Bank to provide a financial, what we simply call financial plumbing, to avoid where they have a hiccup in the night and they can't clear a check, and then they have to rely on a commercial bank the next time with the issues of taking off their clients and all that. So I'm glad Absa is partnering to do this for the sector. So if you look at it clearly, we are looking at different type of institutions with different risk profile, with social capital and financial capital combined. So you will see that the microfinance banks, because they are higher risks in terms of the ownership structure, their capital is higher. There is a built-in risk management there. Because the capital is higher, for them to be resilient and strong, they needed a higher capital because of the way they are structured, the ownership structure. If you go to the community bank, because of the social capital embedded in community, the ownership structure, it has to be owned by the community broadly, by people within the community, and those people becomes the client and the owners of that institution too. If you look at the credit unions, for instance, they are owner managed, they are like a member-based institutions and member first. And so in there is also provided a safeguard that will ensure that these people are treated very well. And if you look at the last mile providers, there are type of financial service providers that will need to get to the last mile provider. In some other countries, they partner with the big institutions and that provider. So the issue of trust wouldn't have been built from the bigger institution that they are representing. But our culture does not support that. So your question actually asks about culture. Our culture does not support that. We are trying to change that culture by asking institutions to come together and work together to inure to the benefit of the sector. So this structure is making sure that we have all the areas of risks, all the areas of challenges that we've had, as enumerated in the past, addressed in a very efficient way. So you want to position this community bank as a future community bank that the youth will be willing to deal with. You want to position these microfinance institutions as broad and bigger institutions that can absorb risks and serve the customer needs of the MSMEs and SMEs very efficiently. And how do you do that? You need to provide them all the resources of clearing, all the financial plumbing. And XIII Bank is strategically going to do that. In cases where, so we want to also make technology as an enabler. Underwriting this whole framework is technology as an enabler. You will not be efficient in this modern day if you are not efficient with technology. And how will they do this if they are so small and they cannot afford the next level of technology? XIII Bank is to re-strategize as a policy tool to make sure that these institutions have access to the relevant technology and are able to drive on that technology to make enough revenue to their owners as well. Again, the term microfinance is actually a product and a concept. We are looking at it at a broader level of a concept. And how do we do that? To build trust How we do that is to improve governance of these institutions, improve risk management, improve operational efficiency, and improve technology to deliver services to the people.
Thank you very much. Thank you.
Please let me just acknowledge the head of banking supervision, whose state I'm actually sitting. He asked me to sit. Mr. Adams, you're welcome. Thank you.
It's good you protected the seat, otherwise you'd have taken it from me. Yeah. Mr. Kusiapwaji, I'm back to you. The policy is one thing, the reform is one thing, but the actual deal is in the implementation. From where you sit, what will success look like when we say we now have the policy, we have the reforms, they've been implemented? What kind of future do you envisage 12, 24 months after full implementation, after full adoption of the reforms?
Okay, thank you. I think for me, a lot of my thinking situates around the fact that the playing field becomes a lot more level. How will I judge successful implementation? I think I'll measure it over a period of time, looking at how the structure and the quality of the sector improves. I think I'll touch on maybe three or 4 points. I think the first one is today, most non-bank financial institutions pay their salaries to a commercial bank. In 24 months, I'm hoping that with our own clearinghouse and our own payment systems, that migration can come and those funds will sit with the institutions where the cost of funds is much lower and allows the businesses to grow. So that's the first one. But the most important one out of all of this is we need to be able to see deposits grow quite substantially. Not only growing, but growing with a lot more focus on current and savings accounts. Our sector has predominantly been driven by a lot of fixed deposits, which, if you look at the current interest rate environment, if we do not move into the area of having a lot of current and savings accounts, we will not be very competitive and not be able to achieve the intended goals that these reforms seek to achieve. So first and foremost, lower cost of funds, because we are now able to attract deposits, and the resultant effect of that is that we are now able to serve our customers better. We've almost always been seen as the go-to player where they are going to charge you the really, really high rates. If we can also attract CASA at scale and get our cost of funds close to where the banks is, we can also then now lend to our customers who live with us in the communities, and we know how to serve them better. So strategically, the sector will now be able to operate much, much better. The second one, and I think it ties a bit with what I mentioned earlier, is competitiveness. Once we are able to solve for some of these long-term structural problems, we can now begin to look at the business models that the businesses have, and be able to put in technology that allows our businesses to grow. So the microfinance sector, I would expect to be a lot more competitive, where, and I'm sure if I ask the question in this room, how many of us operate a salary or a current account in a non-bank financial institution, I'm more likely going to get a no. I hope that changes to a yes once these reforms become implemented. From the shareholders' point of view, because there's this new structure that allows us to grow, if I pick the financial statements of most of the non-bank financial institutions, if I look at fee income, which is the fees that's charged on your account and all of these other fees, as a percentage of your total income, there are institutions who hover within 10 to 20, and it's not, so there's a very heavy reliance on funded income or net interest income, which is taking money, going to lend and working on the margin. That's why you see really, really high interest rates. Now, if we're able to do transactions, operate our own salaries, and not having to pay this amount to the banks where we then have to pass on additional cost to customers, that then improves the income diversification of the sector. I've seen banks where non-funded income as a percentage of their total revenues, 45-50%, and it's really, really substantial. And that's the reason why we have a lot of strong banks, and a lot of us, immediately there's stress in the rate or currency, then the businesses also then begin to struggle. Finally, I think with the reforms requiring stronger capital adequacy and lower NPL levels, all of that becomes crucial for long-term sustainability. And with higher governance and oversight requirements from these reforms, we would also expect that institutions will begin to implement stronger controls around things like cybersecurity, ISO, so that your business begins to be a lot, we gain a lot of trust. So for me, success for this sector is very simple. We need to be able to generate a lot more deposits at a much cheaper rate so that we can serve our customers better, provide much better returns to our shareholders, and overall be able to deliver better asset quality, fewer fraud incidents. And once these things, from my view, improve, then I believe that these reforms have worked.
Thank you. Thank you. And as you were talking, I was getting the impression it also means that the cost of service in the sector is going to fall over time and therefore inures to the benefit of the customers in the segment. Most importantly, we look forward to rates in that, lending rates in that in the sector dropping, which is one of the commonest concerns the public tend to raise about the sector. Mr. Thompson, I'm still going to lean on the insights of your experience. Given what you know to be the problem the sector was seeking to solve and the challenges it has faced over time, do you think these reforms are addressing the root cause that then enables the sector to properly tackle the problems it is expected to be addressing, or is one of just addressing the symptoms once again? Thank you.
You know, I've said higher capitalization is good. I mean, higher capitalization is good because then there's no pressure on you to sell every CD very quickly to cover operational costs. So, higher capitalization is good. I also like the 4-tier system. It was getting a bit confusing. But I go back to my trust infrastructure, the courts, the credit bureau, land registry. If you don't solve those problems, you are going nowhere. What is missing? The Bank of Ghana has set deadlines for institutions to give dates whether they are going to increase their capital or whether they are going to merge. And I think there's a deadline of 30th June and another one of 30th September. But the big missing piece is what's happening to the legacy debts. The legacy issues have not been dealt with. The reform that only cleans going forward has not done any cleaning at all. So I'm glad, no, I can't ask, Adams is my best friend, so I can ask him. So I'm not going to say, but no, I'm not going to ask you, But we need to have a roadmap. You got to say something. Because unless you do that, you're not going to restore confidence. It's only half job done. And then for me, one of the elephants in the room is how government pays suppliers. Because those non-payments and late payments, they feed into the loan book. It's not been mentioned. So key things. The trust infrastructure, if you don't sort out the land registry system, you are going nowhere. If you don't sort out your court system, you are going nowhere. 10 years in court. I mean, it's ridiculous. If you don't come out with a plan for the legacy debts, you're not going anywhere because you're not going to restore confidence. And then you must very clearly ensure that the government is aware that macro instability feeds straight into loan book. And these are issues that are not being discussed. These are issues that are being swept under the carpet, and these are issues that will come back to haunt us. We may not have a solution, but let's put them on the table. The trust infrastructure is still weak. Thank you.
Thank you. This is an open-ended one, following from the comments Mr. Thompson made around the legacy debt. Is there any thought around something similar to the non-performing asset recovery measures that the Bank of Ghana did some many years ago to make sure the banking sector was eventually became strong and sound? Is there something like that being thought for this savings and loans and microfinance sectors? Yeah, thank you.
I mean, ARP, just a couple of comments. ARP Apex Bank is good, but let's make sure they're properly capitalized and properly supervised. Or you're going to create another problem. The ownership caps are good. So generally they are good things, but the foundation, we've got to deal with the issues. We've got to think through the issues and not pretend that some will go away. Thanks.
Thank you.
You want to rehash your question, but so I tried to address it. So first of all, let me give assurance that a robust and forward-looking microfinance framework is not just a complementary tool we are looking at. It is also essential for strengthening monetary policy transmission and driving inclusive economic transformation. Ultimately, if these institutions are strong and robust, they will contribute to the economic growth that we are looking at. And if you look at how we've structured FS Bank as a policy tool, it's to make sure that the monetary policy and all government policies are transmitted and we can trace it. Hitherto, when these policies are issued, we cannot trace it. A simple example is in some countries when this COVID fund came, what happened was that it was passed through the system properly and they can trace it. Some new credit unions were created because once you get the money, you contribute an equity by paying back. But in Ghana, we cannot say the same. We are still looking for the research to show that. But if you look at the way we have structured this, it is to say that once a government wants to pursue any policy, let's say the government agribusiness policy that they want to pursue, how does this come in handy? Now, the rural banks and the microfinance banks are the one closer to the farm gates. If these resources that are going to go in there go through FS Bank, these institutions get access to cheaper funds from FS Bank because the government can use an FS Bank to generate a wholesale funding, which is cheaper, which pass through these institutions and then they pass through the farm gate, get organized such that people take from the farm gate and exports are done. The remittances come back to FS Bank. It goes through the system and fuel the system for economic growth. So that is how this whole system has been structured to make sure that end to end, the services that we are looking for are available for both the institutions. So we look at it from the institution's perspective, from the customer perspective, and from a regulatory perspective. So we are not just coming with regulatory tweak. That is what the video says. It's not just a regulatory tweak. It's a whole structural change. So those structural issues that you are worried about are being handled. If you look at the court system, the governor and the senior manager have paid courtesy call to the Chief Justice to make sure that they start discussions. Some practice has been, a small court has been set in Accra. It's just that it's not broad enough to try to deal with the small loans quickly as much as possible. If those practices work well, they will be enhanced. But to assure you, the legacy issues are not out of scope. They are being looked at, they are ring-fenced. But this is looking forward. What can we do to enhance the sector productivity, the sector resilience? It is true that it has a link with the legacy. And when I was coming here, I had about 3 calls from very senior people who advised me that all we need to do is to make sure that we deal with the legacy problems, and that will be it. But if you deal with the legacy problems without creating a vehicle that takes us to the future, you will come back to the same thing. So we are creating the vehicle whilst another department is dealing with the legacy issues to be sure that this reform is not just a tweak, it's come to the benefits to the Ghanaians. If you look at countries that are closer to us, the credit to GDP is so high. And we are doing very low. My colleague will say, is it below 9%? When Kenya and Co are doing 33 and countries are doing 170% and all that. And what are we doing? If our credit to GDP is so small, what it means is that we are not really growing our GDP with credit, which should be the case. So this is providing the opportunity for us to grow those kind of indicators that shows that financial inclusion is going deeper and not just a word in Accra and the people in the rural communities are not privy to. So it's a broad reform that is having end-to-end processes. We might not be able to explain all of them, but if you reach us, we can give you the detailed research that was done and that gives rise to what we are doing. And I bet you it's going to address the system vulnerabilities, the institutional structure issues that we have. It is also going to make sure that supervision is proportionate and then drive economic growth at the end.
Thank you. Thank you. I'm still with you.
So,
Thanks your question. We know the policy alone will not deal with the behavioral, particularly the fraudulent conduct issues, right? So what is the Bank of Ghana going to do to foster a culture of more proactive fraud detection or detection of governance weaknesses? Because we know in the past some of these have been cited as part of the reasons why we had the challenge. And so essentially, how is this going to be managed differently going into this reform period?
Okay, so I must be honest, no regulatory systems would be successful in tackling fraud alone. No regulation can do that. But what is BOG trying to do? The reform aims at enabling the fraud prevention at the institutional level. So we are shifting from where institutions are reactive rather than for them to become proactive. So where we focusing on a strong governance. If you want the risk governance structure of the institution to have the culture of risk management from the top, from the top. And when that culture is maintained across board, then you are building resilience against fraud. Because when fraud is not covered, then it's easy to prevent fraud in an institution. If one institution there is a fraud, and because you are related or governance is weak, so they cover it by just doing something, the policy says sack the person or do this, report the person, and you cover that. What you do is that you have re-engineered fraud to become a pervasive issue in the institution. So how are we doing it? We are trying to look at making sure that we have stronger boards that are interested, that are knowledgeable in terms of fraud prevention. We are enhancing disclosure requirements, and he mentioned most of the directives we are even issuing. I'm glad he, as an industry practitioner, is privy to those ones and is preparing to make sure it works. So we are enhancing disclosure and operating standards to make sure that we turn fraud. We are repositioning Apex Bank as a center-wide capacity building institution. And like I mentioned, cybersecurity issues are the threats that we have more fraud now is the cybersecurity. And we have noticed, if you look at the 2025 year fraud report, you see that most of the frauds are coming from staff-related, staff-connected, increased by 33%. So if you make disclosure requirements stronger, and these institutions are well-governed, and they are able to report appropriately, it will also inure to our benefit. And introducing proportional supervision so that we provide an enabling environment in identifying the fraud rather than waiting for the supervisor to come at a point in time to check it. The goal actually is to create institutional culture that identify and contain fraud internally before regulatory interventions are made. So we are not making regulatory intervention to prevent fraud. We are making regulatory intervention to prepare a culture that prevents fraud from happening, or even if it's happened, it's reported quickly and it's dealt with immediately, decisively. Thank you.
Thanks for that. I could see you are on the field. You are a practitioner. You hear it proposed from the regulators' angle. You hear it from your colleagues. You hear it from your customers. What are the most pervasive or emerging fraud risk issues that you see in the sector? And what should customers do to protect themselves? Is there anything they can do in the first place? Then more generally, because the regulators are here, do you think they currently offer you adequate tools to be able to manage these emerging fraud trends?
Thank you. It's a very loaded question. I think just to start off, fraud, I must say, is very misunderstood. And thankfully, I've worked in fraud risk before. The bigger challenge with fraud is not just a small problem. It cuts across all parts of the business. Fraud can be perpetrated by your people just by not recruiting the right people. Fraud can happen because your processes have not anticipated that something will go wrong, or people are not following the processes. And fraud can also happen because you have weak systems. One of the things that we typically see a lot these days is identity fraud. And for those of us who do a lot of social media, yesterday, one actress narrated someone calling her and taking her through a process where she actually entered her PIN for her mobile money code and then also sent an OTP, and then they took over her mobile money account, took all of the money out of it, and took a loan in addition to that. You know, they actually went ahead and scanned through all the loan apps that will give her a loan and took facilities just to make sure that they finished you completely. And it's interesting to know that a lot of the fraud is just because it's usually something not very sophisticated. So the first things that you typically would expect is you'd expect institutions to strengthen fraud governance. Because once you strengthen fraud governance and you're able to measure fraud impact over time, that becomes very, very important. From the Bank of Ghana point of view, and I think from the government's drive for Ghana card, Bank of Ghana has insisted on a number of things with the Ghana card implementation, which is biometric verification and liveness check. That allows you to reduce the incidence of fraud. So within our operations, we need to now start incorporating this into our day-to-day transactions. I know there are requirements for specific type of transactions. The question is, how do you incorporate it into other areas which have not been spelled out so that you actually reduce the incidence of fraud? Because once you're able to identify who you're dealing with, you become less vulnerable. And that's always been one of the issues we've had in the past with the multiple IDs. I think on the customer side, it's very important. I think it's a lot of education. You know, education like never share your PIN, never share an OTP. If someone calls you from an institution and is putting you under pressure, say there's a transaction, you need to fill this form, you need to change something. All of these are things that we need to continuously engage customers. Always verify payments before making any payments. But we cannot place the sole responsibility on the customers. I think it's important for us as institutions to make sure that we put in the systems that allow us to pick some of these things. So whether it's fraud detection systems, whether it's call over, whether it's an internal control team going in to look at certain transactions again and paying close attention to trends using data, that then also becomes very, very, very important. But most importantly, in organizations, we need to also increase the level of accountability. Tone at the top, where management must ensure that there's zero tolerance for fraud and ensure stronger staff accountability. Where we are not picking, favorite, somebody does something wrong because the person is the best salesperson. You leave the person to continue doing the wrong, but because they're bringing you the sales, some of those things happen, you know, and some of those cultures also then impact the organizations overall. So I'll say regulation gives us a strong foundation. It gives us a strong foundation to start thinking about how do we manage and prevent some of these frauds. But I think that if there's one thing that my small time working in fraud brought to light, if you look at a lot of fraud is done by organized crime syndicates. They know what they are doing, and they are targeting every other institution. So my ask to the regulator here is, how do we coordinate and get to a point where there's a lot more information sharing, there's a lot more fraud intelligence, common red flags, you know, things that we are seeing across that others can actually pick, because for a lot of frauds, when the fraud managers across the industry meet, you actually realize that what's happening to you is happening to everybody else. So how do we coordinate and fight it from a much more structured point? So on my side, I think that would be, and I think just to add on the delays in the court processes, I think our courts must also try and be a bit quicker. You know, I remember one fraud incident where the case traveled almost 10 years. And the judge was on the case died. And a new judge came and we were going to start the trial, but we needed to have the case. But certain things were not clear to the new judge, and we wanted some of the people who testified to them. A lot of these people were people who were dismissed, so they were clearly not going to cooperate because they had been dismissed 10 years ago, and because of that to come and testify, they are not going to get anything from them. And even some of them are passed. So in the end, the case dragged for 10 years, nothing happened, the company lost, and we weren't able to recover. So we need support also in terms of the legal system to work much better so that once we're able to recover, I think we will not take anything more.
Let me tell you. So, when we went to the definition of those, we're all very excited about profits. So, what we do, we look at the model. We're going to a few years ago, my tablet so essentially I think that's one of the things is almost that I have written it's almost that I appreciate that's what I think it sends me this month ago something don't worry, we're not sure what to do. I'm telling you, unless we build infrastructure, unless the regulations come, and the bank of Ghana is more on the regulations, but the infrastructure around it, nobody's talking about. I've been at the airport where a baby stopped a baby is going because somebody happened to have been for behave because of the system going on. And the babies have investigating powers. They stopped the flight and one of the students had to pay for it. So, regulations are right. Let's think about all the things that go with it. And I'll go back to the video. Make sure institutions that are using land registry, website, I mean, that's the point. That's the point. Okay. We created an ecosystem that promoted growth. What's the point if you have a system where the person is taking growth? And I can assure you, I've heard it so many times. You don't say, let's go to work. Because the other the system is going to be more for creativity. You may get. The regulator make sure the regulator and it's on everybody's mind that we are trying to shadow that. It's there, but nobody's talking about it. And for the practitioners, the opportunity for you to and you to identify all issues. It's not like that. So let's try what people, the system, push the regulator hard. I think the Bank of Ghana is doing that. It's not a push them hard. Because they can talk to commercial court. It's not me talking to commercial court. I think Smith has a special court. Why don't we have a special court? So, regulator, all the regulations are good, but unless you go through that, the next 5 years, okay.
Support it. I guess I will pick your point on the land registry. Those are the ones that I heard the government say they are going to digitalize that. Those are beyond the mandate of the bank. But within the mandate of the bank these days have invested significantly. Even the reporting tools that we have now, those were significant investment to make sure that the reporting burden is lessened. And the huge one again is the sector intelligence and cyber readiness infrastructure that we built. It's one in West Africa so far. Countries are coming to learn how we have done that. So the regulator is on point. And if you listen to Governor Isiama, he's saying that whatever we need to modernize the sector, we should be able to do that to enhance our readiness to support growth in the future. Thank you.
Thank you. I suppose that's your concluding comment.
Oh, you want me to conclude, then I will just I will just wrap up by saying that. So first of all, thanks to the leadership of BSD and other financial institutions, supervision department leaders to give me the opportunity. I just want to say that the reform is not about shrinking choices. It's not about limiting numbers. It's about designing the right institutional sets that will have the right risk management framework across institutions that will make sure that the customers are safe. The customers that we claim we want to provide services for, they are safe, they are served both very efficiently. So they are having that services affordably and with dignity and respect, and do not kicked around when they are in the small default. So we also, institutions are investable, so people can come in with capital to invest in our institution because they build the right structure, the right culture. We also looking at intermediations to be stronger with clearer parameters and credible capital along with ownership nature. So if you look at the directives, it's not really capital. Capital is one, but research has shown that funding is not the most critical one. It's one of them. You need the people, you need the governance, you need the risk management culture, not risk management on paper, culture of risk management, so that if I'm working in a bank, I know that if somebody trip here, it's a cost to the bank. So everybody from security to the end of the governance structure is embedded with the culture of risk management. And beyond that, we want to position these institutions to be able to serve us not only as clients, but we should also have ownership benefit in the resources that this institution generates at the end. So this reform is not a regulatory trick. It's broader, capturing all the institutional infrastructure issues that we have, the plumbing issues that the institutions struggle with now, where they send a client to the commercial bank after some time, the client vanishes and they are looking for that. How do we resolve that? How do we resolve government and many of the government funding that come to this country, mentioned as microfinance? How do we target them to reach the right people? That is what the reform is about, not shrinking number of institutions. Thank you very much for having us.
Thank you. Thank you. Let me do a quick check in the room. Is there any burning question on someone's mind that probably did not come up or was not addressed?
So we'll pass the microphone around and then please allow me to hold the microphone. So we have time for some, we'll bring the microphone around right now. So kindly introduce yourself and then please let your question be as concise as possible. I think we can take 3 at a time and then we'll come back.
Thank you and good evening to all. I like this session and looking at the topic, regulating microfinance in the era of fraud. What I have fallen in love with really is restoring confidence and growth. I saw my brother Ken, and the industry, the microfinance, the non-bank financial services industry has been around for about 40 years. And we, the practitioners, we have nothing to show for all these years that we've been around. We have nothing. Our investments have gone down the drain. And I'm happy today you saying that, because the last time we met, I said to you that the legacy issues have to be put to the front burner. Because without deliberately working on the legacy issues, we are not going to go anywhere. Reason, you are asking us to bring in more money by way of capital. Our money has gone down the drain. What is the guarantee that this additional capital that we're going to bring will restore the confidence? I don't have the confidence. So how do I achieve the growth? So the practical reality is that industry practitioners have had it up to wherever. We are tired and we are frustrated. There is some glimmer of hope from the apex thing that you talked about, that we could get some support from the apex. Because seriously, in other jurisdictions, when things happen like this, the state steps in with clearly delineated agreements, sunset clauses will help you to clean your books so that we are all restored to the levels where we can take off. Anything short of this is going to be extremely difficult, because as we speak, there are institutions that are insolvent. How do we manage the transition? He said it. No bank has turned around, including the Queen's Bank. You know that, Barron's Bank. So we have to be very careful in navigating from where we have been to where we want to get to and ensure a safe landing. I thank you most sincerely for the opportunity. Oh, my name is Dr. Alex Achini, MD of Oak Financial Services Limited.
My name is Dejumi, Dr. Dejumi. And I saw this advert this morning. when I was going through my social media platform, so I decided to come and listen. What caught my interest is two things. Number one, I owned a microfinance, which I lost. Number two, I did my doctorate on microfinance. So, Dr. Adams, I can share my thesis with you for you to. What made me go into it? I did after I lost my microfinance because I wanted to understand why I lost that money. First of all, not every microfinance that got lost or was based on fraud. And I like what Mr. Thompson said. It's not about fraud per se. It's one of the key issues. But it's also about the infrastructure, the culture. And I'm not going to go into all of that. The second thing that I wanted to draw attention to is this. Whether we like it or not, we cannot do away with risk issues, particularly with the issue of fraud. So with technology advancing, one of the things I would want to recommend to the Bank of Ghana to do is begin to find out how do we embark on some sort of attitudinal orientation across board. Because the microfinance institutions, and Kwesi has been very politically correct. He doesn't want to be very practical. As I sit here and I'm listening to him, I'm saying that Kwesi is just being politically, whether it's because Mr. Adams is here, he thinks that he would take his license or whatever. But this fraud issue, if you look at the statistics, the internally afflicted fraud matters within the institutions are higher than what you see on the technology side. It's the staff. And I can give you a series of examples from my own operations. So the question is, how do we ensure that whilst we are tackling the technological side of it, the people that we are going to require, not me, I'm not going to go there anymore because it's been something else. I had a stroke out of that. Okay, so how do we ensure that these young, what they call Gen Zs and, that are coming up, that the Kwesis are going to recruit who are technologically savvy, but lack cultural, attitudinal correctness, can help these institutions to thrive. That's the only thing I wanted to draw attention to. So that as the policy can, and I like the governance side, because if you look at it very carefully, most of these institutions collapsed because the governance part was weak. He started, his wife, his uncle, whatever, he put them on the board, and we don't know what happens in our system. So, I don't know, I haven't read the policy, I must be honest, I haven't read it, but I want to recommend that we pay particular attention at the governance level, and for me, that will help. And then the people that are going to be attracted to come to that level. Thank you.
Thank you. My name is Glory. I work with a bank. I love, when I was going to talk about what I don't know whether I should use the word father, had already said. But I mean, working in the bank over the years, I think that most of the issue has also been related to the staff. Some of the staff not being who they are, or they come in as angels, but maybe as time goes on, because they are seeing money, they are seeing statements and all of that, they are dealing with customers, mentally something begins to shift in our minds. I don't know. I don't say it's the devil, but because sometimes when the fraud or the financial crime team sends their reports and you see the names, you go, but this guy, oh, he's very quiet too. But this guy. So then just as he's saying, something is changing with the attitude and the mindset. And I know that it doesn't matter what a lot of work that Bank of Ghana will do, but if the person is bad here, I don't know what Bank of Ghana can do, but I think one of the things that you could look at has to do with the fact that, when the bank is employing the staff, you give the police reports and all of that. Sometimes I feel like that should be done maybe annually, so the police could do background check if the person is in good standing mentally, if the person is in good standing attitudinally and all that. I know social media can also be like a good place, and even especially for relationship managers. go behind, whistleblowing, go behind, talk to the customers and see if some of us are misbehaving. You can talk, say, oh, I mean, have you received, did the person tell you to make a deposit through their number? I mean, something, so that we don't wait after 5 years, then you get to find out the person has done it. Meanwhile, the person did it the beginning of the 5 years, but wasn't caught. So, working with the bank, I think that that's one of the key things that bedevils the industry. Thank you.
Okay, so I guess we do these three. They all are around the same line. So these are very true, and it's true. You have run one before, so you have a very good experience. And good to see you standing. We all were sat when you were not well. But so there is some arrangement already in the bank, but unfortunately, institutions do not take advantage of that. So there is the requirement that when you are recruiting a key managing staff or recruiting a staff, you request for a search at our end. And that search helps you to know at least if the person has tried a minor fraud somewhere, he doesn't come to recruit 10 more. It's my regular example that if you cover one fraud person, he goes in to create 10 more angels, and then they will go creating 10, 10, 10. That is 100. So we already have a register where you are supposed to report every fraud. Unfortunately, even though the fraud report is showing that the highest fraud is by staff conniving and putting things, about 33% increase last year, I tell you that most of the institutions are not reporting fraud. It was just last week when the discussion on TV, they said that the fraud reports are not coming. So if we do not report, then the register or whatever tool you put in place will not be able to help us. So we encourage institutions and those who work in the bank to ensure that they report these things regularly. If you also do lifestyle audit, I have worked in a bank before some 15 years back. They do lifestyle audit, and one IT guy was caught because he was transferring passwords into some account somewhere. And just because they started monitoring his lifestyle when he started changing. And this Malaysian bank, and because the protocol was there to monitor, he was picked up quickly before the thing became escalated. So that's what we are saying, that Bank of Ghana will play a role, the institution will also have to play a role, and that is where I relate to what you said, the Gen Z. We said that the culture of risk management should be part or a parcel of the institution. So we are not just talking about capital, we are talking about the tone at the top, a risk governance structure that ensures that the culture of risk management is embedded. So if you see somebody doing something and it's not right, because of that culture, you will raise an alarm quickly. You don't wait till the person commit the fraud eventually. Also, again, I mentioned that the cyber intelligence system that we have put in place, once the fraud are happening and you are reporting, the system will be trained to pick up the fraud immediately. When he started opening another account and transferring first, second, the system will pick it up and it will alert you that this is what is happening at your end. So, Mr. Adams, the legacy issues, all I can say is that we are working on it. There's another work stream. Okay. So maybe I can vote.
So thank you very much, the panelists.
I was looking for a question for you.
Yes. So the issue, you see, we are doing these things holistically. So there are some aspects that we are quiet on. It doesn't come to the public domain. So maybe the thinking will be that we are just doing one phase of it, leaving some fundamental issues not being addressed. But the assurance to my brother Ken is that we are looking at the issues holistically. We've had some engagement with some development partners who have expertise in these legacy issues. I think one of the arrangements they are looking at is securitization. So we are very advanced on those sides of it. So let's all be assured that the reforms are being looked at holistically, and all other aspects that needs to be done to make sure that going forward we don't have any issue will be dealt with. But let me also say that when it comes to banking business, two key things are very important. And I got that from my colleague Dr. Nani and Mr. Akosiaboye, which has to do with governance and risk management. If you miss those two things, proper governance arrangement, proper risk management frameworks, forget it if we are doing banking business. And so much as we are asking the regulator to do ABCD, I think if you are a practitioner, make sure that your governance arrangements are working very well, and your risk management systems are also working very well. Maybe the question that we should ask ourselves is that in that same space, you are operating in that same space, be it banking business or non-banking business. You have some of the institutions doing very well, and you have some also struggling. And you also say, what happened? And when you trace, you get to know that it's either the governance wasn't right or the risk management wasn't right. And so let's all, much as you are looking into reforming the space, look at these two key issues very well. On the frauds, fraud is something that has been bedeviling the industry for a very long time. But I think we all have responsibility, be you a regulator or a market practitioner. Bank of Ghana have a system, and the banks are aware, where if frauds happens, you report to the Bank of Ghana. We do these things to avoid recycling of bad behavior. If frauds will happen, banks will not report. Somebody is sacked from a financial institution because of fraud, but they will report it differently to the Bank of Ghana. That same person is being engaged by another institution, and as part of our due diligence process, go and ask where the person worked for which he was asked to go, that Mr. A is going to institution A, Z. He worked with you. Can you give us some information about the person? And you see very flowery language about the person. When the person was sacked or terminated because of fraud. And so that character will find him or herself somewhere in another bank and go and practice that same bad behavior there. And so we all have responsibility. We are doing our part, but I think we need the market players also to help us to put an end to these issues. Maybe once you are in an educational institution, I think what we also need to do, maybe right from the beginning, is to, I don't know where we are losing our values as a country. But I think we need to teach our children the issue of proper values, ethical issues, and not to leave it for parents alone, or leave it to related people alone. I think as a society, we all have a responsibility in making sure that people grow up with that ethical values. Because when it comes to ethics, it's not only in the banking business. These days, people don't want to employ young men to even sell their products for them because the experience that, or the narrative that is coming out, that the person will come within a short time, all your goods are gone. And so it's like the whole society, there's an issue that we need to deal with. And I think it has to start with our educational institutions. Yeah, thank you very much.
Thank you. Thank you. And whilst you still have the mic, I have a question for Mr. Adams related to fraud. Obviously, I think we've discussed the issue of fraud from the perspective of the employee fraud. That is, employees denying the firm of value in one way or the other. But within the context of the microfinance savings and loans conversation, and also casting my mind back into the past, there is that of the key man or sponsors of the enterprise and their fraudulent conduct and how it affects depositors. There are many depositors who have lost money because of fraudulent conduct. Some just vanished, some the same way we are talking about 10 years in court. Some depositors have taken enterprise savings and loan sponsors to court, and they are also in court. Given the regime we are stepping into, and I know some level of work has been done in the past, will you shed light on some of the things we have done to improve that regime and to reduce the likelihood of that?
Yes, so I think what we are doing now is all parts of what we are doing. It looks like, and like my colleague said, we had fragmented environment with some of them very what is the word? The entry requirements not being so strict or being so, the bar was so low. And so we have all sort of characters coming into the space and getting people, taking money from people and not making good their obligations. And so it's based on all this that we are trying to see how do we structure that space such that at least we tighten the entry a bit so there is not anybody at all who has 2 million Ghana cedis who come and set up a microfinance business. And you know, when it comes to banking business, be it the major banks or the microfinance bank, it's highly leveraged. You come with a capital of, let's say, 2 million, and you can leverage on that to take as much as 20 million Ghana or 15 million Ghana cedis. And that is where the problem is. And so the discussion has been, why don't you structure that space such that once you are going into the money deposit-taking environment, then at least we know that you are coming up with a very high capital. That will help you to manage the kind of risk that you are exposing yourselves to and all that. For the legacy ones, I know, but like the discussion has been, our cost systems are low. I know some of them are in court. And that is where I think it's something that we need to do. And then, like my colleague said, the Chief Justice has been engaged by our governor. I think sometimes some remedial measure has to be taken to serve as a deterrent to other people who will want to go into that space. And that discussion is also ongoing on the side of the judiciary to see how fast some of the criminal, even aside what Mr. Thompson was talking about, recovering their toxic assets, how fast even those who are culpable in terms of taking money from people and not accounting for them can be taken through the mails to serve as a deterrent to others who want to go along that same tangent. So a lot of things have been done in that respect.
Thank you. Thank you.
Sorry, just to respond to Doc's comments. I think on my side, my views have come from the fact that I've been involved in the setup of fraud risk. I've seen how fraud risk has evolved because I worked in a bank, and how that translates into and how that works everywhere. One of the things about fraud is, and she mentioned it, is the person you actually least expect to commit the fraud. So if you don't invest in systems that allow you to prevent the fraud, you almost always find yourself wanted. I remember my first investigations when I worked as a fraud analyst. The first person who got dismissed was my mate from university, a good friend of mine. You know, he had colluded with the filling station, and they were passing invoices. You know, the filling station will give him invoices to indicate that they've come to buy petrol or diesel for the generator. And we found out. But one of the things that became clear to me as times progressed was the need to make sure that fraud controls become part and parcel of every business. So my comment is more around the thinking in the business in making that an integral part. Some of the frauds that we had, there was a gentleman who hadn't gone on leave for almost 17 years. Because he knows that immediately he leaves his desk and somebody comes to sit there, the person will see what they are doing. But in the smaller institutions where that capability and that knowledge isn't there, you find yourself wanting sometimes. So for me, I would say invest in the systems, invest in the people, and make sure that you see it as important. But most importantly, if it comes up, we must always deal with it. We must fire the person, we must make sure that the police deal with them, no matter how long our court cases drag. So I just wanted to make that point.
Yeah, thank you. I think, given where the conversation... sorry.
I take exception to when people say Ghanaians are fraudulent. We're not fraudulent. We're human. If you don't have systems and processes, people exploit it. It's as simple as that. And, credit to the Bank of Ghana, the increased capitalization will allow the institutions to invest in systems and processes. We're as human as anybody else. And the ecosystem. What does the police report say? When I go for the police report, I know I'm doing it to, what do they say? Righteousness. Tick a box. A few years ago, my uncle, who was then a senior officer in the prisons, he went to inspect some new recruits somewhere up north and found out that one of the people that were recruited was an ex-prisoner. Systems, processes, government, risk management. People are the same all over the world.
Thank you. Thank you. I'm sure if we are to continue, I can't, Mr. Adams is my regulator. I can't deny him a comment.
So I agree with Mr. Thompson that systems, structures that will prevent fraud is key. But I also believe that we need to work on our people. There are a lot of people issues that we need to work on. One, and he's my senior crab in terms of age, because one of his sisters was my mate. And when she's talking, it tells me that they are far, far advanced in terms of age. And I think during our time, when I started working as a banker, I started with a commercial bank. For 5 years, I never thought of owning a car. I never thought of owning a house. Because I know with time, those things will come. I don't know what has become of us as Ghanaians. And now somebody starts work within a year, he wants to buy a car within a year, he wants to buy a car within that same year that he started working. And I don't know when this kind of cultural issues started emerging in our environment. And so much as the institutions need to work on their systems and structures, I think we also need to work on our values as a nation. And that is very important. Thank you.
Thank you. Mr. Adam, maybe that time you were not queuing for 2 hours before you get a ride home.
Okay.
That's just by the way. Thank you very much, all of you, for the interesting engagement. I'm sure if we are to allow time, a lot more interesting comments and perspective will come through. It is not the end of it. Typically, when we break or we end, you will see the panelists and even some of the insightful experts amongst you will hang around for a while, so you can pick up insights, conversations, make suggestions to them. It's not often that you get the regulators who make things happen in your midst. So please, whatever suggestion you have in your thoughts, push it to them. Tell them it's the reason we are not developing, and let's see what they make with it. Thank you very much.
Thank you so much, Adolf. I think that our panel members deserve a huge round of applause. We have, please remain seated. Please, let's keep clapping for them as they resume their seats. Thank you so much. This has been such a wealth of experience and knowledge. Thank you so much for sharing your knowledge and experience with us. I'd like to quickly, before we have our closing remarks, acknowledge some key personalities from certain institutions that have joined us. We are all very important, and we appreciate the fact that we are all here. But I want to say thank you to all those who have joined us from Bayport Savings and Loans. I see that quite a good number of you are here. Thank you. We also have representatives from CAGL Finance. Thank you so much. Opportunity International. Thank you so much. From Republic Bank, I'm sorry I can't see the name so well, but from Republic Bank, we are very grateful. The National Banking College, Mr. Joel, thank you so much for coming. Thank you for honoring our invitation. We also have from Oak Financial, Doc and his team. Thank you so much for making the time to join us. From GASALC, the Ghana Association of Savings and Loans Companies and Finance Houses. Thank you so much. And then I think we also have representatives from GAMFIM. Thank you so much for making the time to join us. We'll take some closing remarks from the Chief Executive Officer of the Ghana Association of Savings and Loans Companies, after which we'll do a brief presentation to our panel members, and then we'll call it a night. So I'd want to introduce to the platform Mr. Trinibu Akodua, who has been very instrumental in organizing this event. In fact, all the savings and loans companies that you see here, it was through him that we managed to bring him here, and even some of our panel members. So Mr. TK, please, let's show him some appreciation as he comes up.
Thank you very much, and good evening. Oh, I'm not hearing. Good evening. And I want to acknowledge Bank of Ghana. Last week, we met some people in Kigali, and they said, why is TK free with the regulator? And I said that is the only way I will be relevant in my work. Why? The regulator needs to have a relationship with industry. And so thank you very much, Bank of Ghana. Thank you, UPSA Law School. This is my alma mater, actually. I learned my law from this institution. And so thank you very much also organizing this. Please do invite us often, and we will come. This particular conversation on the financial sector reform did not just came out from the blues. There is a broader framework called the microfinance policy of the country. And so very soon you will hear more about the microfinance policy, which deals with a number of the issues that we are discussing. This particular conversation we've had today has brought to bear that there are certain structural issues that we need to deal with. One has to do with internally as institutions. We need to build our systems. We need to get our employees doing the right things. And shareholders also have a role to play. Boards and management, we all need to play our role. The issue of trust, we need to work together to build it. Fortunately, the industry is also collaborating to also build one payment system where we will connect to gifts. And integral to this system is the issue of fraud management. And we hope that when we get there, anybody dealing with a microfinance bank eventually, from January, the central bank says we are going to call the institutions microfinance bank. When you are dealing with them, even now, you should be confident that you are dealing with an institution that thinks about the future, your welfare, and your well-being. So be confident to deal with any of the microfinance institutions, savings and loans, finance houses, community banks that you are dealing with. To conclude, I want to say that this whole reform is focusing on making sure that the customer or the depositor is well protected. Two, is also to make sure that the institutions are also adequately protected to serve into the future. This is going to benefit everybody. An institution needs to change how things are done. Governance, risk, customer education, among others. The conversation on the legacy issue, the conversation on the role XIII Bank will play, the conversation on judicial reform, the conversation on what needs to change. This conversation and engagement continues. And I'm very confident that when we continue to engage and collaborate, we will have a better future. I am very confident about the future of this industry. So most often people have asked me, why are you still working in there? And I said, I have confidence that the future of MSMEs in Ghana actually resides and depends and emanates from the non-bank sector. Thank you very much for your audience.
Thank you very much, Mr. Chinibu-Akodua. We appreciate all that you have done to make this event a possibility. I left out one very key introduction. Please forgive me. We are also joined here by Madam Gloria Korte, who is the principal of the National Banking College. We invited them, and she showed up. Madam Gloria, can you please give us a wave? Thank you so much for coming. Oh, I've also just seen Mr. Joe Jackson, who is the CEO of Dalex Finance. Thank you so much, Mr. Jackson, for coming. And to all the others that I may have left out, please forgive us. We really appreciate the fact that you were able to make it here this afternoon. So I'd like to call upon Dr. Francisca Kusiapia to assist us with some token that we have for our panel members for taking time off their extremely busy schedules to join us here this afternoon. So the plaques say presented to, and then the name of the panel member for leading the conversation on regulating microfinance in the age of fraud, restoring confidence and growth at the Absa-UPSA Law School Quarterly Banking Roundtable 13, and then Wednesday, 18th March 2026. So the first person I'd like to call upon is Mr. Akwesi Abuaji. Yeah, we'll put it back. Thank you so much. Thank you. Also, Dr. Seth Kwame Anani. Thank you so much, Doc. Thank you so much. Then also, of course, Mr. Adolphe Pega. And then finally, Mr. Ken Kwamina Thompson. It's okay. Thank you so much, Dr. Kusiapia. Thank you so much, our dear panelists, and in fact, to all of us. We were also joined here from the very beginning by Mr. Cyril Nye. Mr. Nye is the head of communications and sponsorship for Absa Bank. It is through Cyril and other colleagues at Absa that this has been made possible. So Cyril, thank you so much. Our regards to Madam Isofwa when you go back. We are so grateful for the continued sponsorship of this platform. We are so grateful. Okay, ladies and gentlemen, this has been the 13th edition of the Absa-UPSA Law School Quarterly Banking Roundtable. We'll continue to engage you in the coming weeks. Please do well to follow us on our social media platforms so that you get to know of the next editions that we'll be having. Thank you. God bless us all.